Okay. All right, mic check, check, check. 1, 2. Hopefully you guys can see me. Right there. So based on reports today, later on in 30 minutes, we have FOMC FOMC statement, and then we have federal funds rate. Then an hour from here will be the press conference. No, it doesn't really do that much. It all depends on what Powell is going to basically say from there. Then we have Chinese yuan, PMI, and then some light to medium impact news later on. So let's go through. My focus here is basically the dollar index. Looking, this is the 1 hour chart, but if I go through the daily time frame, notice on this side, the thing that I'm looking for is I want this to break through yesterday's low at 99.45. But if it doesn't, then the higher low will take precedence because of the new breakout from here of 20th of February. Right, so based from a high low perspective, then the odds and probability that the dollar index will reverse. But if not, medium longer term, I'm still very bearish anyway with the dollar index, especially with what's happening with the pandemic. In my opinion, I believe they have to print more money. So with that being said, if they could print more money, then the valuation of the US dollar will also drop. The thing here today, as well as the S&P broke through key levels based on this impulse right here. So this is the monthly chart, because it's going to be finished pretty soon, actually tomorrow. But I'll be doing another live trade market update tomorrow, since the end of the month of April. If it finishes like this, you have a higher low and you have a piercing pattern, meaning that the closing has pierced through halfway of the bearish candle prior to that. That is a very strong reversal basically pattern in regards to supply and demand, meaning that buyers are basically taking over. So they will retest this one at 33.97 at one point in time. And when that happens, within 33.97 if we're going to see a nice proper lower high, then I'll be definitely bearish within the market. So I believe the second wave is still going to happen, in my opinion. But looking at the daily time frame today, that 29.30 did break through. So there is actually a range. I don't know if you can see it very well here. So the low of this guy is 28.53. It retested that for the past 2 times now. 1, got rejected. 2, got rejected at one point. You have a Gregson Doji right there yesterday. You have a lot of selling pressure. But for some reason, there's now technically, when this happens, and this is actually a really good example on a live case scenario, that patterns like Grayson Doji, sometimes they do fail. It all depends on what the market will basically do. So if they have no clear confirmation, then the odds and probability sometimes that you're going to get hit in terms of losing is highly also probable. So we have no control of what the market does. So the best way is to have a proper confirmation prior to actually entering. So like this one, there is no confirmation of a lower high, but instead they broke through, created a new higher high. So where to from here? It'd be very interesting what the FOMC is going to say later on today. Then if not, then if you're going to have another, if there's a lot of selling pressure today, then the correction will occur. But if not, this is going to continue and all the way to 31.34.2 here, which is a major supply level at this point. When that happens, then this is where the turning point of the major second wave is going to happen to retest 2178. Longer term, I don't think if it's the lower high will happen, then we're out of the bull market. So when that happens, we're going to basically look into it. But for now, we're going to focus in regards to what the Fed's going to say in terms of the reaction. Can they hold and continue for the bulls to come in? But if not, if it finishes like this, then there is a potential correction. But you see this, all the forceful candles right at this point. A lot of force right there. Slight correction before a continuation of price to the upside. Likewise, basically for the VIX, VIX has to come back down in regards to the volatility index. Notice they're already touching through there. So forecasted this as well. From this point, there's a lot of room in order for it to actually to correct itself, and finally it's happening. So if it finishes based on the higher low right here, then the odds and probability for it to reverse is highly probable, and hence the S&P is also going to correct itself to retest major trend here, approximately around 18 back to 20, which is also back to demand, because they have to fill this gap whether we like it or not. And when that happens, then the retest of the S&P from its peak is going to happen right here, somewhere around here. So medium, I'm still bullish, and also bearish with the VIX, but longer term, I believe it's not, I don't think, I believe it's not sustainable with, especially with what's happening with the whole global economy. Unemployment rate basically increased, right? There's about 22 million based on the last report that it did come out. So a lot of businesses are dropping, and the market is not sustainable in regards for it to keep on going to the upside. So it's just a matter of time when the second wave will basically hit. So part of disclaimer, by the way, I'm not here to give you any form of advice. I'm just here to give you some form of piece of information as a form of educational purposes. And you have to still do your homework if you want and actually speak to your financial advisor. But if you're trading or investing, you're getting to this, just remember that any form of trading is always going to be high risk, especially if you don't know what you're doing, and hence would recommend to get more either educated or some form of information basically from there. And this is all why actually sometimes we get together to get some form of clarity. My way of trading is not based on perception. I'm just basically dealing on what the market basically dictates and giving my own objective opinion basically from there. Okay, so that being said, let's move to the Dow. So the Dow is basically also the same. Notice that it did break out. You have that gravestone doji yesterday. It was kind of uncertain. I was about to short tube, however, I stayed away because of today's FOMC. Normally, when there's high impact news and people are uncertain, I normally just don't go in unless I'll see the proper direction of where the market is gonna go. All right, so same thing, 25,236. It's less volatile than the S&P. I mean, they're still volatile, don't get me wrong, but in regards to the location of price, it's less than the S&P. So if it breaks through 25,236, then same thing around 27, they're gonna retest this major supply before the second wave will actually hit. But if it doesn't want to go, and if you'll notice also decrease in volume. So when you're seeing a decrease in volume and something way is also oversold, and you're going to see some form of another uncertainty candle, another doji. So that's also going to just stagnate, and then it's going to drop. So I am not bullish in the next few days, to be honest. So it all just, like I said, it all depends on what the market reaction is going to be. It's approaching supply. Normally in these particular cases, I'm slowly testing to start to short, regardless of what asset class I'll be trading. Okay, so short term still very bullish. However, there's a potential reversal that's going to come pretty shortly, in my own honest opinion. So that being said, weighs also as well with the dollar index. Let's look at oil. So I know that a few days ago went to the lowest it's ever been, stagnating. We have a new higher low here breaking out, that creating minor higher high. But based on this powerful force of sellers to the downside, I'm the same. I'm not bullish yet with crude oil. In my opinion, there is still going to be another retest of the demand right there. So when that happens, when there's another retest because of this strong force and what happened basically last week, in regards to I believe it was banks not giving out any more money to businesses. There's a lot of supply in there, and when that happens, when there's still too much supply, there's not enough demand, then the price will basically drop. So it's got to keep retesting on this proper demand. Longer term, though, people will still need oil once everything goes back to more normal. My own honest opinion, based on what the data is giving me, you're going to see some form of, see, based on the monthly right there, after 4 months of it dropping, it has to correct itself. Stability, minor correction before a continuation of the force. We cannot ignore there's a lot of force right there. So oil is still in the downside. However, correction has to happen. Unless, of course, there's only two different ways anyway: stagnation, correction, or continuation of the momentum. Since I don't have the yearly chart based on this, part of this is also way overbought. Sorry, way oversold. And once you'll see some form of retest within this low 1591, what's the cheapest it's ever been since 2001. So major demand level. So worst case is to go below this low right there, below $10 basically a barrel. Okay, so that being said, medium to longer term, I'm bullish as a form of correction, and it's just mainly just being patient from here. It's a really good price anyway of already getting in. You have a proper nice higher low retest in terms of minor right there back to 29. Okay, so same thing with WTI, US oil, West Texas oil. I like this one. You have a clear cut of a proper higher low today. It finishes like this, then you have a nice clear morning star pattern. For us, that's a part of a methodology where it's also way oversold and you have a higher low. You can make at least $1 or $2 to go beyond these higher highs to create a minor higher high. And retesting this major supply that used to be a major demand after breaking out, now part of your demand level all the way to 2058. That's close to $7-8 in my own opinion. Okay, so that's a good in regards to the distance. So this primary, secondary, I know the tertiary trend, once it breaks out through the tertiary up downtrend all the way to around 1977 from here, and then notice once it breaks through here too, all the way around 32. Because if you're dealing and looking at the channel, it has to fill that space somewhere, sometime in the future. So that being said, I'm bullish with WTI and likewise for crude oil. Longer term, on the other hand, this is where we need to reassess when that happens, because a correction also needs to occur somewhere, sometime in the future. So this is only the data that basically been given. So since July 2003, strong major demand breaking out currently. Worst case scenario, you know how much you're willing to lose through there is $13 if you're gonna be buying anyway. Okay, so that's with WTI, Texas oil. Let's look at copper and gold here for a second. copper have been very bullish with gold. I'm sorry, not copper, gold. So very strong all the way around to 1800 in my opinion. All they need to test 1800 first, and then from 1800 mark all the way to 1920. That's very similar, I believe, around 2010, 13. Yep, right there. I remember that. So very powerful, very strong. Approaching supply on the other hand, does it have more room in order for it to head towards the upside? Absolutely. Like I said, with this pandemic, with the whole global economy in regards to what's happening globally, and if they cannot sustain or contain the virus, there's going to be a lot more in regards to people investing to major resources like gold. The dollar, like I said, I'm not bullish with the dollar, but gold in general is a more of a safe haven. So wanting to be aware, it actually created a proper lower high right there in terms of, I call it double jab. Some will call it basically a double top. From a lower high, they will retest this low. So back to proper correction from this impulsion right there. So if it breaks out with this trend all the way to 1653, even $1,600 basically an ounce. So just be aware. Currently though, it's an area of demand, higher low. A better price point in regards to selling from this amount perspective, since I'm a supply demand trader, is around 1720, 730. You have a less risk with a higher probability. Okay, so but at this point in time, you can't go against the trend. Higher low takes precedence. We're going to see another wave or impulsion to go to the upside to retest from there. Then if it breaks out, bam. Major one is 1675, 1650. So that's gold. Let's look at copper. That's what copper, the Aussie has been going up because of copper. Notice this correctional value right there. I am not bullish overall. In actual fact, I'm looking in regards to shorting Aussie pretty soon because Aussie actually does follow copper more than actually gold lately. Okay, so likewise for oil and regards to the dollar CAD. The dollar CAD has been dropping lately. He's been leading as a leading indicator rather than normally it's a lagging when oil normally drops first. Then the CAD basically will decrease as well and the dollar CAD will go up. So right at this point in time, on the other hand, CAD has been so strong that the dollar is actually weaker. And so something is being done there internally, because mind you, Canada is one of the major producers of oil, right? By situ. So that being said, something is up, and hence with oil as well, and that's why I'm bullish with it. Okay, so looking last but not least, I like to look at the 30-year bond yield, which is in conjunction with the dollar index. Lately, the treasury yield actually has been leading, and so that is one of the leading indicators that I normally use. So from this point in time, it's been dropping for the past, actually yesterday it did drop. Currently it's up by 1%, which is not as much, but they also have to retest back to 10 right here, 10-point mark, right? So still bearish overall with it, which actually makes sense. So that being said, I'm going to go through. So we got 9 minutes. I currently have some trades with the euro against the dollar. I've been long since 107, had the second wave through here right at this point. So currently up around approximately about 100 pips right at this point in time. So I'm still bullish with it, medium to longer term. So it's just a matter of reacting what's going to do today. The plan at this point actually is, if I go through a smaller time frame, back to the area of supply, however, that higher low that formed a few days ago, it's also pretty strong. So I just need a proper clarity, but you can see here from the force correction continuation, I believe it could break this high, 108.88, and to continue all the way to around 109.50, back to 111.50. Longer term, so I got all those arrows right there. Someone retested this price point away to 115. This was last March, before everybody went on basically shut down. So they know something. Somewhere, sometime, they have to fill that gap. So I'm still bullish overall. I have a higher low right here too, that if the dollar or the weaker of the dollar will happen, in my opinion, somewhere, sometime in the future is going to reach back to 124. So right now, on the other hand, based on the weekly, if it creates a power higher low, I am certain that price will reach and retest 109.61, 110.63, 111.65. So as a currency trader, been following this for quite some time now, so I'm actually bullish than anything with it. In regards to the macroeconomics based on the dollar, like I said, I don't think the dollar is not sustainable. So especially if they're going to print more money, quantitative easing is going to happen, and the dollar's valuation is also going to deplete. And depending on what the Fed's going to say today, can they decrease the interest rates? Perhaps they would. Once again, with everything what's happening, so everything's all based on the whole global economy right at this point. Okay, so that's my take with the euro. Aussie US dollar, same. I believe this is also not sustainable. You can see there from a correction standpoint, back to the supply, low risk, high probability, in my opinion, and the odds and probability that the wave to come back all the way around to 57 summer sometime is also going to be highly probable to retest before it can continue to the upside. So monthly on the end, you see it right there, the low, lower low, back to 55, actually almost back to around 2001. So 2003, 2000, yeah, February 2003. So currently it's just correcting itself and then retest back to 60.55 right there. Right now, because of the dollars are also very strong, resources like copper and gold is also very strong, and it's also going up. I'm actually surprised that the Australian dollar is not beyond 70 at this point in time because of gold, and hence, like I said, that's why right at this point, the Australian dollar is actually falling more copper because of BHP Billiton and Rio Tinto. All right, moving forward from there, from Aussie, let's look at the yen. So the dollar yen, we're currently bearish at this point in time. However, notice you have a hammer forming right at this point where you have a buying pressure to the upside after 1, 2, 3, 4, 5 days, trading days of it dropping approximately around 120, 200 pips. So a correction is also going to happen pretty shortly. I believe there's also some form of yen news. Actually, not as much as the low impact news. There was €1 more tomorrow. Monetary policy, main refining state, ECB, refinancing rate, unemployment claims. Forecast is just 3.5 million compared to 4.4. Mind you, though, if there's going to be more, then there's going to also increase in the amount of people getting unemployed. So nothing major. In regards to the yens, in terms of news, a lot of low impact news. The only one that happened was, I believe, the beginning, or it was last week. Yeah, not even. Yeah, so nada. Alrighty then, so that's good. Euro yen. I had it right there. Bam. I am also bullish with the euro against Japanese yen right at this point in time. Bullish with CAD yen. It's actually currently wedging at this point. So from a lower high perspective, lower high has higher precedence than the higher low. So I'm also keeping an eye on that. Then let's look at Aussie yen. Bam, feel that gap. So same, in regards to this, around 70, between 70 and 71, I'm looking into actually shorting. All right, got 3 minutes. Let's look at the euro here for a second. Go through multiple time frame analysis. So back to the demand, 1 hour. Nice 1 at 50. So currently just 10 pips up. Can it break out 108, 80, 80, 90? Adds in probability, yes. And let's see. Sorry, let me just close this one down for a sec. Oh, 866. Alrighty, let's check it. 67. See if the spread is got 1 minute. Okay, 63, 64. See in terms of the reaction as well of the S&P. Notice the amount of volume right there prior to actually on the dot. Boom. Okay, nice. Alrighty. So the whatever they're dictating, that is currently saying 64, 74, 10, 15, 13. So we're gonna keep on, we'll just be patient based on that. See how far it's gonna retest 108.80. Can they break through that? 0.8885. $77. Gravestone Doji, going to retest through there. Correction can come back around 108.70. But that's a 1 minute time frame. So nice second opportunity. Sorry, you can see there 108.66. What we stated, I said 108.70, went to 108.66. Notice the amount of volume that's in there. Notice the increase in volume even prior to what the news is. And look at the very mini candles prior to the news. So that's a pretty good one. Medium term, pandemic risks keeps zero rate pledge. Ooh, okay. All right, so if they're going to keep it to zero, then what happens then with the dollar? Notice the dollar is well kept dropping. And hence, let's look at the daily. I want to break the low of yesterday, which is 99.45. If it creates a lower low, then I'm going to keep remaining bearish until back to here. Because you have a clear lower high. Next one should be a new lower low from this side. So around 98.50 with a much better projected price point all the way to around 62 in order for it to properly correct itself from this big impulsion that happened basically in March. Remember from 94 all the way down to 103. So bigger correction through here. And then, or even through here, 96.50, then we can reassess again from that side. Alrighty, so that being said, yeah, I believe it's already stabilized itself. One of the major questions I get is USO. I'm still actually still also bullish with USO. I believe this is actually the cheapest it's ever been right there. So they need to fill that gap, fill that gap. They have to fill this gap somewhere, sometime in the future. That's my honest opinion. Okay, so it's just a matter of being patient. Notice in terms of volume is actually decreasing. A lot of is way oversold in my opinion, and there's divergence. So when there's divergence between volume and price, then bingo, you have a high probability that this is gonna head back up to the upside as a form of a correction. All right, so I'm gonna remain as that. I'm not gonna hold my positions right at this point. It's still looking pretty good. So that's my take on that. Euro dollar daily time frame actually really still looking good. So target point is still on point between 109, actually all the way to 110. Breaks to 110 for me, then they need to retest at 111.50 sometime in the future. Okay, so I'm still bullish with the euro. I'm bearish with the dollar index. I'm not bullish with the S&P. The like medium to long term. I believe it's not sustainable. I'm bullish with oil. So that being said, oh yeah, oil also has to come back because of the petrodollar. So too expensive, right? That makes sense. If the dollar is too expensive, there's no way that people will be buying oil. So they have to decrease the valuation of the dollar in order for oil dollars to come back up. To make things cheaper, especially if the global economy is going to be like this. There's no way they're going to that people can basically afford it. Okie dokie. Any questions for me before I wrap it up? Going once, twice, done. Thanks a lot for coming in, guys. Hope that makes sense in regards to what you guys are trading. Good luck. All the best. Happy trading. Till next time. Be safe out there. Take it easy. See you later, guys. Bye for now.